Hey everyone, my name's Andy, my channel's Finding Value. If you like commodities, if you like making money, and you like looking at undervalued sectors in the world, this is the channel for you. Click the thumb up button if you like this content, and we're gonna go into a comment about position sizing. The comment that someone left in the comment section is actually excellent, and I wanted to share this with everyone. So Ray asked, the tricky thing is, something which has great value may go down further in nominal value. So I'm going to go right to the position sizing. The key, I think, is position sizing. My philosophy is to divide up your capital by 200, so 1 part equals 0.5% of your investable capital. That's actually that's really good advice because of many reasons. And I'm going to go into those reasons of why this is good advice. So what he's saying is, take your total amount, divide it by 200, that's your 0.5% of your investable capital. Now he says he's got 4 parts here, but I stick with invest 4 parts. These are the companies that I go into because I understand the commodities boom is gigantic. We've never had valuations this cheap in 100 years in terms of a ratio analysis. So the valuations are dirt cheap. The upside potential from the real estate market, because it's so messed up from the mid-2000s and what government had done to the loans, created this large market imbalance. The imbalance has never been this big. It's a 4 million home shortfall that we have to build on top of the 1.5 million yearly demand for new homes. I see inflation being pretty big. This right here, he has invest 4 parts. It says if you understand the stock in the cycle low, which we do, have researched it, which we do, the company has good management, which we choose, and its stock is starting breaking out of the upside. I'm doing that all for you guys. And that's what you're seeing with this channel and the picks. The picks I've had, the reason they've been so explosive to the upside is because we're doing our homework, we're getting in the sectors that are good, and we're finding what I think are very compelling companies. Now, in some of these areas, it's been such brutal bear markets that all you're left with are the strongest companies. Uranium comes to mind. You're gonna have to do a lot more digging in the gold and silver area because there's a lot more companies in that area. And I think there's a lot more, we'll call it garbage companies out there in relationship to the uranium sector. So, next, I was following this, basically, this strategy already. I just didn't really think of it or break it up that way. And what he says is you're supposed to overweight. It says avoid investing more than 2% of your capital in any one stock unless it is absolutely compelling. And you should not have more than 3 stocks that are compelling sizes. And I actually did that with two of my holdings. So I put in 40 companies. If you had a $20,000 portfolio, you put $500 in each. I put in these companies because I think they're the most compelling companies that I can find. Some of them are very high risk. Some are because of the position that the company's in that I'm taking that position. It's not because they're profitable. It's because they're building something that the market's going to need that they could profit absolutely outsized returns on. Remember, this is my speculative portfolio. I have a very large portfolio that is stuck in physical precious metals. So this is a very small portion of my net worth. Now, if you look at this and you did a $500 breakup, it actually comes out to about 40 companies. I own a little bit more than 40 companies. Now, these are the companies that I own. I'm not going to go through all of them, but I'll show you the companies so you guys can see them. They're all right here. I'll scroll down just to show you all these companies here. Some of these are videos on the channel, and you can see kind of what they are. So this right here is oil and natural gas. Now I own a little bit more than this, but I just put some up here. Next, this is my gold and silver holdings right here, the majority. Next are diversified miners. This is a royalty company, Nova Royalty. Next, this is the uranium sector. Now, in the uranium sector, I might have a little bit more here, but the uranium sector has the largest upside potential along with oil and natural gas in this next bull market. And the reason that I'm spreading my money out so much is because When you have an extremely outsized return, and I'm going to pull something up here to show you what I'm talking about. If you have these asymmetric bets where they can return massive amounts of money to your account, let's say that one of these returns a 500 bagger. It's 500 times your money, and it's possible. We've had 1,000 baggers before. So let's just say one of them is the 500, but you don't know which one the 500 is. So you spread your money out, and you spread that money out amongst a bunch of them. So your probability of one of them hitting is pretty high. So if you have $500 in it, and you get a 500 bagger, which is 500 times your money, that's $250,000 from that one position, if you can hold the entirety through this bull market. So you have $250,000. Now I'm going to divide that by your $20,000 original amount. That equals 12.5 times return. That one position returned 12.5 times of your entire amount of money. So what you're doing, these are such large asymmetric bets. And if you're buying stock, all you need to do is catch one of these in your portfolio and you get a 12.5 bagger on your total amount. So what you want to do is we research the living hell out of the companies to ensure that the companies are good. They possess the traits that potentially could be far outsized returns. You divide your capital up just like this suggestion is, because I was following it without even really thinking about it. Now, if you hit one of them, and I think we're going to hit on most of them, but you hit one of them, that's a 500 times your money, you get a 12.5 times return on your total amount invested. This is allowing you to reduce risk, because if one of the companies goes bankrupt, you're not getting hit too bad. And it really captures, statistical probability wise, it has a very high likelihood of capturing one of those extreme ones that just go berserk. And what we're doing is I'm identifying and giving you guys not just the strategy here, but I'm also giving you the fundamental background of where that value can be created. The value can be created through exploration, then becoming a developer, and then producing from it. If you only have 10 of these companies that are in that kind of stage, and you can get all 10 of them in a uranium bull market, which will be probably one of the biggest uranium bull markets that we see looking at the market balance, and you have large opportunities with real estate going up and gold being repriced higher, we're getting a scenario where it's more about capturing the total value that these companies are going to provide than it is trying to pick and choose the best. So not only does this reduce risk, you're going to have the highest probability of capturing the upside. So I think this is a perfect strategy to consider when you're investing. So if I had $20,000, and I'm going to do this in a hypothetical portfolio for everyone, and you can watch the portfolio grow. This is it. This is the strategy that we're going to choose. And the reason I like this strategy so much is because it captures that value while reducing risk. And I'm already doing it in my portfolio, basically not really knowing that I was doing it. And I position size a little bit more or less depending on the companies and my knowledge of those companies and the likelihood that they were going to succeed and develop outsized returns looking at management and their assets. So here's the companies. You can screenshot this or pause the video to see what I own. These are the ones that I'm going to cost average into for the hypothetical portfolio. I've already started this hypothetical portfolio. I'm going to share it to you guys. I'm putting in the numbers of if I were to purchase it Friday. I'll update that, put in those cost bases so you can see what I'm buying, what I'm doing, and my positions. This is the sizing that I'm going to use, position sizing, and this is how I'm going to deploy it in the hypothetical portfolio. Thank you for listening. If you like this channel, subscribe and give me a thumbs up. Thank you, and finding value.